has the headlines for us. Steve.
Sarah, thanks very much. Two very interesting changes from the Federal Reserve being announced. First, the Federal Reserve altering the rules for banks when they participate in the PPP program. And what they're allowing is bank directors and shareholders to get a loan through their own bank. Now, this may not strike you as a big deal if you're from New York or California or New Jersey or Connecticut, but in the smaller towns across America, imagine the auto dealer, guy who owns an auto dealership, is on the director of the local bank. He could not apply for a PPP loan through that bank. Now they can do that. The Fed lifting these bank insider limits that are out there for bank directors and shareholders for their own businesses, of course, not for something for the bank. They're not allowed to get to the front of the line, according to the memo that the Federal Reserve put out here. That's one here. Very small change, but maybe has a big effect in some of the small towns when they get more money for the PPP program. On the second thing, maybe a little more macro here, the Federal Reserve earlier this afternoon announcing that it's reducing the amount of purchases it's going to make next week, reducing the amount of mortgages, MBS, to $12.5 billion from $25 billion daily, and reducing the amount of treasuries from $15 billion to $30 billion, from $30 billion daily. As you know, Sarah, we talked to John Williams, the New York Fed president, this morning. He did say the Fed had been successful in calming certain markets out there. And this is another sign of that, as the Fed has gradually brought down from the torrid pace that started when the markets were collapsing and credit markets were frozen, the Federal Reserve gradually reducing the amount. These are still big numbers, but they're much less than they had been in the past. Sarah?